Assalamu alaikum. Welcome to video 2, the IFRS S2. IFRS S2 is climate related disclosure. So in this, IFRS S2 requires disclosures about climate related risks and opportunities. So specifically they have mentioned it's about climate. Now, here also we have the four areas that we have covered in IFRS S1: governance, risk management, strategy, and metrics and target. So under governance, as for IFRS S1, that means this disclosure also according to IFRS S1, but it is relating to climate related risks and opportunities. Coming to strategy, this is also as per IFRS S1, but relating to climate related risks and opportunities. So you see there's a connection between IFRS S1 and S2. You have to study them together. But let me tell you, IFRS S2 is not relevant for financial reporting students. It is only relevant for SBR students. Now, IFRS S2 requires the following disclosure about the climate related risks and opportunities. So risk management, the likelihood and the magnitude of climate related risk, how company prioritizes this risk, the input parameter for risk assessment, process, whether the process is consistent with prior years, how company identifies, assess, prioritize, and monitor the climate related opportunities. Just change the word from sustainability to climate related. That's it. Everything else remains the same as S1. Now, the extent to which the process described above are integrated into the overall risk management, and metrics and target. How the company will measure, monitor, and manage climate related risk and opportunity. Targets and opportunities that are set, objective of the target, the period over which the target will applies, progress made towards the target, and any targets that are required by law or regulation. Whether the measurement is validated and assured by an external party. So these are some climate related metrics and targets. This is not there under IFRS S1. They are greenhouse gas emissions. So you can look at the greenhouse gas emissions, which can be classified as scope 1, 2, and 3 emission, including the approach to measure those emissions, the reason why that approach has been chosen, and any changes in your measurement approach during the reporting period you have to disclose. Climate related transition risk, amount, the percentage of asset or business activities that are vulnerable to climate related transition risk. For example, cost of moving towards more sustainable working practice. See, this you don't have to do any changes in your accounting, measurement, recognition. IFRS S1 and S2 is only about disclosure. So you just disclose, disclose, disclose. Okay. Next, climate related physical risk, the percentage and the amount of assets that are vulnerable to climate related risk. For example, rising sea level, increased frequency of devastating storms. This can have an impact, especially on construction industry. Some industry like service industry will not be so impacted by the rise in sea level. But if you are having a factory nearby the sea, ocean or a beach, let's say, you are very vulnerable. Okay. Next, climate related opportunities. The amount and the percentage of assets or business activities that are aligned with your climate related opportunities. Then capital deployment. Amount of capital expenditure, financing or investment towards climate related risks and opportunity. Then internal carbon prices. An explanation of whether and how the company is applying their carbon price in decision making. And the price per ton of GHG that are used to assess the cost of GHG. What is GHG? Greenhouse gas. Remuneration. Description of whether and how the climate related consideration are factored into their remuneration and the percentage of the executive remuneration recognized in the current period that are linked to the climate related consideration. So now you will link your remuneration with the climate related consideration. Thank you for watching, and I shall see you in the next video. The next standard is IFRS 18.